What we're looking for is harmony. Is there harmony in the charts? Alright, the 240 chart cannot be opposing us. In other words, we'll look at this in just a second, but if all the candlesticks are saying we're going up, but the 240 chart says we're going down, who trades the 240 chart? The big boys. That would tell us that this is perhaps only a retracement and we should sit on the sidelines until it proves itself out. The 60-minute chart cannot be opposing. It can be black, which is neutral. Okay, so that means that if we'll look at it here, that means if everything is green, then we have a green light to go ahead and trade up. If everything is red, then we have a green light to trade down. We need the 15-minute chart to have an arrow, money coming in, a painted candle closed. That tells us that the potential is there for a sustainable trade. And remember, these are counter trend trades, therefore they're much more dangerous. Now we need to have all three of the pad O's in the same direction. That tells us if there's harmony. And then we make our entries on the 3-minute wildcard chart. Now on the wildcard we do not need both of the moving averages the same color, although they're shown for you. We would trade to a T30, then move our stop for a move to the HSI target. So here we got a 6 aces up here, and you can see first of all that there is the desert, so we're ranging at this point, which means we are not trending. Okay, we want to catch a move. All right, so what do we look for? All right, we look here and we see first of all down over here on the 240 that the HMIs are green. Okay, that tells us that at the big boys level they're buyers. We look up here in the 60-minute chart and we can see that they are actually black. They were red, but they're black. That's neutral, so that's okay. All right. Next thing we look at is we take a look and see if we have money coming in. Well, there's our green arrow telling us money is entering in the buy. We know at the 240 and the 60-minute level they are buyers. Okay, so now we have to have all three of these pad O's going up. So we can see here, and I've marked the times here, so you can see at 10:48 the 3-minute started moving up. Okay, you can see over here that the arrow on this 15-minute chart turned up at 11:15. Over here at the 60-minute chart you're looking at 11 o'clock. At the 240 you're looking at 11 o'clock. Okay, so at 10:48 it's too early yet. Okay, but at 11:22 you can see that the 7-minute was definitely turned up and headed up, and you can see also that at 11:30 that the pound dollar was moving up. We had green, 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 green arrow, green on the 60-minute chart, black HMIs, green candles, and green HMIs. All right, so that's what we're looking for, is that kind of harmony. It's not very hard, and you can see here's the result of that trade. Okay, so the money entered for us, and once it did we had the opportunity to come down here and trade on the 3-minute chart. So once those 6 aces charts, all of the ones I just showed you, say we're going one way up, we then would come down here and we have the ability to make our entries on a 3-minute chart. Now it's important to note that we never trade the 3-minute chart by itself, only when all the bigger charts say exactly the same thing. And you'll see that we got our first arrow right here at about 11:40. Okay, and then up she goes, and at each one of these T30s we move our stop. Okay, then we get another opportunity to add to a trade here where the money comes back in and we have another opportunity to trade, and then we get another one up here for trade. And remember, it's 30 pips between this line and this line, so this is a move that went about 250 pips right here. All right, and you'd have 3 fantastic safe entries on that chart. Let's look at the royal flush. Look at the royal flush. Now here we wait for all the charts which have HMIs and pad O's to line up with the trend. That's harmony. Right? We wait for the valid wildcard setup. That will be the main chart that we're trading, which means we need the dot, the arrow, the painted candle, and we need to be moving out of the desert. That tells us we have momentum entering the market. We enter using the 3-minute wildcard, and we also make re-entries here, and we trade to the HSI targets. Now the royal flush can typically go 100 pips to 700 pips or more. So we move our stop when both the 5-minute and the 30-minute pad O's turn against us, and we do not exit. We let the market take us out. Alright, so let's take a look at it. Okay, in the center here, first of all, you'll see we have the the wild card, and there's the money coming in at the 60-minute level. Okay, we would be waiting for an arrow and a painted candle here, but we can look over here and we can see immediately that when this is happening, the 240 has the candlesticks going up. We have HMI bright green, there's money as harmony, and there's momentum at the 240 level. Here's another view of the 240 level, and you can see that that paddle is headed up green and the HMI is also green. We go down to the 30-minute chart. The 30-minute chart is heading up and the HMI is green. We look at the 5-minute chart and we can see that the paddle is headed up and the HMI is there. We got lots of gas in the tank. We want to stay with this trade. All right? So there's the result of that trade right there. Straight up in the air. Now, we then look over and we look at the HMIs, and we can see that the 5-minute has turned red and red, so that means we're going to have a stalling out here. But you can see that the 30-minute and the 240 and the other 240 are still telling you this market could be moving. So we don't exit the trade, we move our stop, and we stay in this trade, maybe for a couple more 100 pips. So that's what we're looking for these three setups. We also have a reversal setup, but I'm not going to go through it here. Now, swing trades, or the royal flush, are about the big boys' moves. They can live through 150 pip retracement. You can't. So therefore, it's all about getting a great entry, and then you got to have some way to convince you not to click this trade out, because if it's going 200 pips, you don't want to click out for 10. So it's based on a basic Elliott wave cycle, okay? And what's important here is the 3-wave and the 5-wave are the waves that we want to catch. Those are the trending waves for multiple hundreds of pips, okay? So we take the 240 chart that we showed you and we open it up here, and I'm going to show you what it looks like. First of all, you have a moving average here, okay? When you're above the moving average, you have more buyers than sellers. When you're below the moving average over here, you have more sellers than buyers. You'll also notice something, that when the market starts to trend, there are no wicks on the bottom of these candles. When it stops trending, the wicks show up on both sides. We call that the gang fight, all right? Now, when wave 1 takes off, okay, we're on a 240 chart up here, you can see on the Canadian. When wave 1 takes off, it pulses up and immediately slams back down in 2, okay? But what I want you to see is when the wave is underway, you're above the moving averages, there's only one wick in this whole movement, but the HMI is bright green, telling you have sustainability in this leg of the wave. Then we get wave 2, which is a pullback, okay? Then we get wave 3. That and the 5-wave are the most important waves to get. Once again, you can see we're above the moving averages. The currency is trending because there are no wicks on the bottom, and the HMI up on the top is telling you that you are sustainable. Okay. Then we get wave 4, which is a pullback wave. All right. Then the market turns around, and these little things are called blackjacks. All they're trying to do is tell you momentum is shifting, and then we get wave 5. Once again, you can see that the HMI tells you stay in this trade. Momentum is here. We're above the moving averages, and we have no wicks on the bottom of these candles. So these are trades. You know, this little trade here started out here at about 1100 and ended up here at 1400. You know, so you know it's a 300 pip move. All right, great. You can find entries, but can you find exits? We have 3 ways to find high probability targets, not counting regular old technical analysis. And the more you know about technical analysis, the easier it will be to trade our charts. We have T30s, we have PAT projectors, and we have an HSI tool. So let's look at each one. Now the T30s are interim targets. They're based on the pivot points on a day chart. So it's a real thing that the market uses. The big boys use pivot points. Now we broke it down using a complex or algorithm into 30 pip targets. Hence the name T30s stands for 30 pip targets. This gives you a real target that shows you 2 things. First of all, where this next pulse may stop or stall. whether you should even take the trade based on a minimum risk to reward ratio of 1 to 1. Now the average trade stop at our level is 30 pips. It's different for every trade, but an average of 30 pips. Therefore, to have a minimum 1 to 1 risk to reward ratio, you would need to have a target 30 pips away. If you don't make that trade correctly,